Good morning, Clive. Thank you very much for coming on the Insurance Brokers podcast.
Morning, Sarah. How are you?
I'm good, thanks. I'm really good. It's crazy times and new technology skills being learnt all the time. I've never done virtual podcasts before now.
Well, yeah, I'm becoming an expert in Zoom and house party as well. So we're using all the means at our disposal, definitely.
House party is something that I've been trained in this week as well. It's fabulous. So today I thought it would be really interesting to talk through the effects of COVID-19, particularly on the underwriting market. So I did a podcast earlier with Alan Chandler on the effects of COVID-19 on brokers. Broadly, I imagine the same issues are coming through MGAs, and I wonder if we can have a chat about it.
Of course,
So,
yeah, absolutely.
How's it affecting you personally? How are you managing in these crazy times?
Actually, I think my working day has become, if anything, more intense, Sarah. I start pretty early, then which works pretty well for me, and then I go through the day with various calls and Zoom and email and telephone conferences, etc. I try to finish reasonably about 5. Usually about 5, go for a walk and then try and do some exercise, and then try not to do too much in the evening either, because otherwise I think it feels like work just becomes your whole day, really. So that's keeping me sane. I think the walk and the exercise, I think, is critical. I hope that most people are doing that and taking advantage of their one exercise a day.
How do you think it differs between pre-COVID-19 from a working perspective? Because for me, I'm significantly more efficient now because I'm not traveling to and from places, but that social contact is odd not having it other than through screens.
Yeah, I agree with that. I think it's also important to remember that work isn't a clear inbox, and I have to keep reminding myself of that I don't get that my day isn't dictated to by the email that comes in, that I actually still have some goals that I want to achieve at the end of each day, at the end of each week, and things that are still important strategically, so that you're not just sucked into the sort of the here and now. So making sure that I'm speaking to all of my team, speaking to brokers, speaking to insurers, and trying to maintain that contact when it's not forced upon you by a regular series of meetings or bumping into somebody in the street. You don't bump into somebody in the street in your own office, whereas your sort of virtual bump into somebody in the street could just be an email to say, how are you doing, or hope things are okay, which I've started doing a bit of as well. So it is definitely different, but like I say, I think the main thing is not to be dictated to by the inbox, really.
Do you think it's a bit of a tricky question, because we don't know how long this is going to last, or the way it'll phase out, whether there'll be a second bounce, etc. But do you think we will go back to as many face-to-face traveling meetings as we did before, or do you think this Zoom boom will? Oh, I like that. The Zoom boom will take off.
It's a good question. I was only talking to a colleague of mine just before this, before I spoke to you about this. We've been quite traditional in that we tend to be in the office quite a lot, or in our places of work, traveling quite a lot, suits and ties, and now we're beginning to see people in hoodies and leisure wear, etc. You know what, Sarah? My general feel is, yes, it would be nice if we did, but I think human nature is this will become a memory, and we'll revert back to what we did before, probably quite quickly. So I think it could, and it will for some people, but I think majority of people will probably revert to what they did before.
Yeah, I can see both ways, and I think some of it will depend on the industry you're in.
Yeah, I think that's right. I mean, my brother runs an exhibition company. Well, at the moment, that's an industry that is not doing anything. Whereas in insurance, I think we're really lucky in the fact that we're still providing that service. We're still busy. We're still renewing lots of clients. And the main thing is, I'm clearly, our main focus is on supporting those clients through this difficult time. Because if they're not there, then that affects us all. So helping them through that, I think, is absolutely critical.
So what steps have GRP taken? What sort of things are you doing to help your client base?
We've started quite early on this. The sort of things that we were doing. We set up a technical working party, which I chair, that meets every couple of days, 2 or 3 times a week now, to go through any issues that have been raised by our brokers on behalf of their clients, whether that's technical wording issues, whether that's cover issues, whether that's getting interim payments from insurers, whether that's we're looking at whether we can do auto renewal with insurers, what sort of rate increases may well be justified, but is now the time to be pushing through standard rate increases. So we're talking to insurers about that on behalf of our clients. I'm dealing with the Ombudsman. We've taken QC advice on wordings from insurers to make sure that where there's any ambiguity in insurer wordings, and unfortunately there is ambiguity, we know that because nobody expected this, that we're doing everything we can to protect our clients and our brokers' interests and those people that are working on behalf of clients. It doesn't mean that we're working against insurers, and in many cases we are the insurer as an MGA, but I think it's all about, at the moment, it all feels about how can we help people through what is as we keep hearing from the government, an unprecedented situation. So all of those things, Sarah, and anything else that occurs to us as this happens, because we don't know what tomorrow's issue is going to be, really, do we?
Yeah. How are GRPs, MGAs doing? The reason I asked the question is just talking about supporting insurers. The effect this has on our economy will be dictated largely by what happens, I think, with insurers. And if these payouts enter the billions and capacity hardens to unprecedented levels, it affects everybody. So there's a balance here, which I don't think a lot of outside of the insurance industry understands. So how are GRPs, MGAs doing, and what do you think about that?
Yeah, our MGAs, as you know, and as we talk about that, we don't put a GRP label across them. So whether it's Camberford, whether it's Plum, Usure, Lexicon, Oasis, any of our MGAs, they are niche. So the niche and specialist nature of those MGAs means that it's very, very different for each of them. If I take European Property Underwriting Limited, which is insuring some of the biggest property investors in the world, they have actually not had a huge impact. Whereas Camberford, who do schemes for the leisure industry or tour operators, have seen quite an impact on those particular schemes. Conversely, tree surgeons, recruitment schemes for drivers are in huge demand, as you could imagine. So we've got a very good split, some of which are affected negatively, a majority of which thankfully are affected positively, or are working hard to make sure that their clients aren't too affected. So we're keeping a watching brief on it. Clearly things like new business is going to slow down, and I think that's been true for probably all brokers at the moment. But on the converse side again, retention has been better. Because I think people are concentrating on running their businesses, not on necessarily looking to get new quotes on their insurance. So our MGAs are in pretty good shape, but again, I speak to all of the guys every day. We're always looking for trends, which might be level of submission or renewal retention. The interesting thing is that claims definitely do seem to have gone down. As you know, we have Plum, we have Cherish on the household side. We have 3XD. And we're seeing a much reduced number of claims, obviously on things like escape of water and theft. We have seen one or two spurious DIY accidents, though, that we.
They're probably all my house, to be fair.
Yeah, we're looking into them quite closely. I think as far as the insurance industry is concerned, yeah, I agree with you. I think we have a massive part to play in keeping the economy going. One of the things that we're doing is on our retail side, and which I'm working closely with them on, is things like interim payments. So we know that most policies don't provide cover, but there are some that do. And on those, we're looking for interim payments. And in particular, Sarah, I think it's where a claim is non-COVID related, that might have been going on for a little while, talking to the insurers about getting a payment out for what might have been a loss that happened 2 or 3 months ago, where a surveyor was due to come out. Can we get some money into the hands of our clients to ease their cash flow? We think is a really important thing. Can we find a way to do a video assessment of damage by the client literally using an iPad or a phone? Those sort of things are definitely happening. We're doing that within Plum with our own claims, but also encouraging insurers to do that rather than waiting to make a payment. Make a payment quickly, because at the moment, we know that running a business, cash flow is everything. And if people are struggling for cash flow, a claim payment that might have taken 2 or 3 weeks because of bureaucracy or because of just the time it takes to do it, getting it done quickly could create almost hero status for your for an insurance broker. That's something that client wasn't expecting. Oh, it's happened quicker than I thought. So
Yeah.
So I think that's a slightly long answer to your question, but yeah, that's how I feel about it.
No, I think that's fabulous. What are you seeing in terms of the renewal increases as a general rule? Are insurers forcing through standard increases? Are they taking what you're saying, and just what are you seeing?
Yeah, I think it like I say, I wear 2 hats here. One is sort of looking at our insurer relationships and underwriting as GRP across the piece, but also recognizing that as MGAs, we're running 8 virtual insurance companies as well. So yes, we're pushing some degree of rate through, but we're also being quite mindful of the fact that now's not a time to be driving too much rate in it through, where on those products where we can see that it's going to have a major impact on an insured. So we're trying to be circumspect on that, but recognizing that not all claims are going to be COVID related. We know that as an MGA, the key thing is to make money for our insurers, that we have to have good underwriting results, and some of that is related to rate. But we're also doing some other things, Sarah. So one of our businesses producing, both on our broking side and on our MGA side, is trying to produce cost-effective products. So an essentials product, it's a bit stripped down so that people can not have to make the choice, do I get insurance or not, but could I take out a product that just gives me the basic covers that I need, so I'm protected against catastrophes, maybe with a higher excess, maybe with some of the ancillary covers stripped out. And we're doing that both on the home side through Cherish and also on our retail broking side with an essentials product. So rates, I know we get quite obsessed with rates within the insurance industry, but I think at the moment it's just being mindful of what our clients can afford whilst still wanting to make money for insurers.
And how are you managing with things like, there'll be quite a lot of gaps in cover that are brought about because of COVID-19. So empty commercial property, you know, all the normal stuff. How are you providing for that in terms of stripping cost out rather than going and saying you need to also now insure this? How are you managing that in a client-centric way?
I think as far as things like unoccupancy are concerned, we're trying to take a really pragmatic view on that. So yes, where there's very short unoccupancy clauses in, we're looking at those. I know that within we specialise in unoccupancy in several of our businesses. Usure, Plum have unoccupied products, and they've worked with their insurer partners to ease the restrictions on whether that be 30 days unoccupancy, extending that to 60 days. So trying to do things that help our insureds. But I think what we're seeing from clients is, even though their premises may be unoccupied, people are still want to go there just to check. It may not be every day, it may not be every other day, but maybe once a week, going to check on their property. Yeah, I mean, it's you know, in our caravan business, we have it's a population that likes to pay by cheque, and so somebody goes in once a day to pick up those checks and make sure they're banked, to ensure that we're trying to give service to our customers. They're there alone. We make sure, you know, we've made sure that that they're still self-isolating and all of that sort of thing. So yeah, it's a challenge. It's a challenge for everybody.
What do you think about additional cyber risks as a result of people working from home, and separate but related, GDPR problems?
Yeah, I hadn't really thought about the cyber. Well, I hadn't thought about it. Interestingly, we suggested a Zoom call to one of our insurers yesterday, and they said they won't do Zoom calls because of that they've got fears of security and being hacked into. I hadn't heard that so much till yesterday. So, yeah, I mean, I think it's definitely heightened that risk. But again, I think the people are worried about that, but I think people are just more concerned about back to cash flow. I think we can. It's something that we will want to talk to clients about, and we do. But like I say, I think predominantly people are concerned about cash flow at the moment. I think as far as GDPR is concerned, the challenges that were there before remain. I mean, we're very clear on all of that, and the sharing of data is something that we take very seriously. But we're still getting, interestingly, we're still getting from brokers. We'll get things that are not encrypted. We'll get information on clients that is not encrypted, and it comes into us unencrypted. So you sort of think, well, that could go anywhere, and this has got quite a lot of information relating to an insured on it. So it's, again, I think it's something to be mindful of, but probably not the priority that maybe it was prior to this.
I think so too, and I think the world appears to be taking a sensible approach. Not everybody's a technical expert either in technology or in the intricacies of GDPR or the intricacies of cyber and the potential risks there. And I think most people, like you say, are panicking about their own, what they do know, their business, their market. And there will be stuff that's missed, stuff that goes awry, but I don't think people are penalising that at the moment. I think it is just one foot, next foot, lesson learned, okay. Next foot, lesson learned, okay.
Yeah, I agree.
I think it's a tricky one. What are your, I'm going to say, hopes and predictions for the industry for 2020?
Oh, for the industry. I thought you might ask me about how whether you thought I thought Spurs were going to end up in the top four or not. But
if I was going to talk sport, it would be rugby, I'm afraid.
Yeah, I think, as I said at the start, I think we're getting, in some ways, we're getting quite a bad press. The stuff that's been in the press over the weekend, Raymond Blanc, on the front page, in the Times and things like that. I think in the main, the wordings are pretty clear, and there wasn't, unfortunately, cover for this pandemic. I think where the challenge is where there's ambiguity, and I'm speaking to clients, to brokers, where they're referring to me and from within our broking group and saying, well, this looks like it's covered to me. And if it looks like it's covered to an insurance broker and to an insurance underwriter, I'm pretty sure it's going to look like it's covered to the client. And they're wondering why the industry is trying to, in theory, wriggle out of it. And that's where that ambiguity, I think, is not doing us, is not serving us well. So my hope is that when we come out of this, people will feel that their insurance broker, their insurance underwriter helped them as much as they could, and didn't try to wriggle out of cover, because I don't think many people are trying to wriggle out of cover. I think it's just the way the wording has been put together for this pandemic, which is unprecedented. So I hope that we come out of it with a bit of, I think there's an opportunity for, as I said, to come out of it in some cases as almost like in hero status, that our insurance broker really helped me when I needed it. So that would definitely be a hope. Maybe it's a long shot, because I think, unfortunately, we often take a bad rap for a wording that might not be clear, and we've interpreted it a certain way. And I know there's a lot of talk about that. But that would be my hope, that we can work together, brokers, insurers, clients, to come out of this feeling like, actually, you know what, insurance is really important, and I probably should be thinking more carefully about it, and not just take what the cheapest price is in future, because I can now see that wording, I can now see that service is really important. So that sounds a little bit like a sermon, but genuinely, being heavily involved in it, it does make me feel like that.
What do you think is going to happen from an economical point of view? Because clearly there's going to be huge losses in terms of business over the next year, and I personally think it's going to take a lot longer than the 08 crash to recover from. What do you think is going to happen from an economical perspective for the SME markets?
I'm really hopeful that it will be that sort of V-shaped recovery that's been talked about. I do think there will be pent-up demand when this is over. I think people will want to go back to what they did before. People will want to go on holiday. People will want to go to restaurants, assuming that that we can still do that, assuming that financially people can do that. So I think that demand will be there. I think most of it, Sarah, and I've been saying this for some time, and it's not exactly rocket science, it just depends how long this goes on for. Indications are that we're going to start talking about easing the lockdown in the next couple of weeks, or at least talking about it and maybe phasing that. I think if that happens, because potentially this could have gone on for months and months, I think then you would have sustained damage to the economy. I think if we can start to ease that lockdown sensibly over the next couple of months, 2 to 3 months, and businesses can get back up, then yes, and I think entrepreneurs will emerge, as always happens. You're already seeing, delivery services being you know, everybody's creating a delivery service. Lots of people are doing that sort of thing. So I hope that we recover quickly. I have my gut feel would be that we will, because we're human beings are resourceful and entrepreneurial and robust, and will recover.
I like that. There's a lot of doom and gloom, so I like your positivity. On the positive note, when do you reckon schools are going back? Because I know, like myself, there's a lot of people hanging out for that.
Yeah, that is thankfully my children. I mean, we have a fantastic household here. I have a civil servant, an accountant, and an insurance broker in this house. It couldn't be more boring, could it? But so we don't have schools, but I do think, you know, that's hopefully. I'd heard that it might be it will be in May sometime, although somebody else said they may not send them back until after the summer term, which I suspect for parents like you would be you know, you'll be tearing your hair out. So
It'll be interesting for sure. My guess is mid to end of June. I think they'll try and get them back before the summer, even if just for a few weeks. But that is just my guess.
yeah, it can only ever be a guess, can't it? I think the sad thing is for those kids in sort of the last year of their schooling, either in a primary or a secondary school, who won't have
my eldest is due to go to secondary school next year.
Yeah.
So if she doesn't go back, she's, you know,
well, it's
crazy.
the joys of writing on your blazer and you know, and all that sort of throwing eggs at each other. I don't know if that still goes on, but probably not.
Well, it did when I left school. But again, that's a few years ago, should I say. No, I think I like the positivity. I think it's really interesting. What do you think will happen for the consolidator market in the insurance industry? Because I've heard, again, lots of different thoughts about it. I'd be interested on yours.
Yeah, I think we see, again, I'm surprisingly, for those who know me as a grumpy sod, I'm being quite positive here. That I think there's opportunity. We're continuing to have a lot of dialogue. We've got a very robust pipeline of acquisitions. Literally every day we talk. Our executive team meet daily. Every day we talk about potential acquisitions, and I think it will make some brokers reflect on what do they want to do when this is all over. So I think consolidation, if that's the phrase that we're going to use, will continue. I don't think that opportunities will dry up. I think the demographics, the challenges of regulation, the challenges of technology that remain with the broking in the broking community mean that often people are looking for a home where they can retain their brand, they can get some support and help. Interestingly, I've been speaking to a couple of brokers in the last week, not part of GRP, just people I know in the industry who've asked for an opinion on something, be it a wording or a claim situation. And I wonder whether people will say, look, I need to be part of something slightly bigger to help me in situations like this, because what we're doing, as I say, having a technical working party, the support mechanism that we've given to our brokers, creating wordings, giving them people that they can talk to, creating subject matter experts. It's hard to do. Well, it's impossible to do when you're on your own. So I think, in summary, I think consolidation will continue. So,
do you think there'll be a reset on the type of multiples we've been seeing?
I think what might change is the way that people are thinking about the value of their business, and I do think that, you know, potentially payment terms might alter. So people will be looking at, you know, the amount that's paid up front compared to the amount that's paid in an earn out. I think those will happen, but you know, valuable businesses are still valuable businesses. We're certainly not thinking that that this is an opportunity to do things cheaply, or try to think that prices, you know, will be forced down as a result. I think it's just being sensible about, with that whole thing about not knowing. We don't know what we talked about. We don't know what the economic aspects are going to be, and neither do the brokers. So I think that's an aspect. You've always got to try to protect yourself against that. But certainly we don't see this as changing things fundamentally in terms of our desire to acquire.
I had quite an interesting conversation with Kenny McIver, who is one of Boston Tullis partners, and we were talking about what we could be doing now to help the smaller brokers, because like you said, some of the stuff that is helpful is not readily available when you're a one-man band, or when you've got, you know, 10 staff and you've got 15 different hats to wear. And one of the things we were talking about was acquisitions, and he said he thinks the market's ripe for a reset, and the 07-08 crash reset. It took a long time to recover the type of payouts that were happening, and actually thinks that this is another reset on the industry and crazy prices for things. So that's why I asked the question. I just thought it was quite interesting.
I think it partly depends whether you think prices are crazy or not. I love Kenny.
Love to get Kenny in now and then watch you through the day.
Yeah, maybe prompt me to send him a how you doing email. But no, I think the 08 crash was caused by much more deep-seated economic challenges. This is a single, if you like, a single incident that is impacting, but it doesn't mean that businesses are any worse than they were before. Of course, it's going to affect our SME clients, but as I say, I think the key thing is helping those SME clients to stay in business and be robust and go forward. And if they're there, then we'll be there. So I'm not sure about that.
Fabulous. I like one of the reasons I love these podcasts is because I'm getting so many different viewpoints from different people that really do know what they're talking about, and it's lovely to hear something like you just said. I was including you in the former group. And it's just interesting to hear the different dynamics, what different people are, what different businesses are doing, what strategies they're developing. It's really, really interesting. One more question before you go. I know you've got lots of things to do. So this is almost a quote in my own scribbled handwriting from another podcast I did, and I'd love your thoughts on it.
Okay.
Okay. Capacity is draining out of the insurance market, and we're moving into a hard market where niche covers will be difficult to place. We will, this is because Solvency II, the recent stock market crash, Ogden, soft rating, floods, and now COVID-19 have all combined to create the perfect storm. And actually, this is a topic which Boston Tullis, in conjunction with Alan Chandler, are running a webinar series on. So I would love your thoughts on it.
It's hard to disagree with that. All of those things have played a part. We're not seeing a reduction in capacity. To be fair, what we're seeing is that difficult areas remain difficult. So if you want to place, it's hard to place risks, will always be hard to place. Part of the reason that we specialize in niches within our MGAs is because we really understand those sectors. And in those sectors that we really understand, we get capacity support. I think if we were to try and enter into an area that we don't have any expertise in and just try to get delegated authority or try to get an insurer to support us, I would understand why they would say no. But if you look at the niches that we operate in, which is really all I can talk about, we're not struggling with capacity. I think the debate we had about rates is an interesting one, because I think insurers are looking to, in the main, to get rating, but have to take into account the fact that businesses are struggling, and businesses are going to have a tough time, certainly in the short term. So I don't necessarily see that, and we're also seeing some very good underwriting results from some of our capacity partners. We deal with almost all the major insurers, and certainly in our major insurer relationships, most of those, we are making money for them, and they are making money. I think that doom of all the things that you talked about is not my experience, Sarah. And I think the last hard market, if you think, was really hard market, happened after an incident after 9/11. We're not at the moment seeing that. So I'm amazed at how positive I'm sounding on this, to be honest with you.
I'm loving it. I think I'm going to go for a walk and do a dance.
Maybe I'm being naive, but I think if you know what you're doing in a sector, and despite all of this, despite what's happened on COVID, if you understand a particular sector, I often talk about the fact that we have a tree surgeon's book, only because I can hear one of them operating outside my window. We still know everything there is to know about tree surgeons. That hasn't changed. We know what makes a good one. We know what makes one that we wouldn't necessarily want to insure. So I don't see that that's changed. And provided we can still prove to our capacity partners that we understand that and we can make money for them, and that those people survive this, I don't see it. I really don't see it.
Well, I think that is a perfectly positive note to end on, and I hope that that your 2020 predictions come through, because I think it'll be happy for all of us if it does.
Yeah. Okay. Thank you, Sarah. Thanks.
I've really enjoyed this, so thank you very much.
No problem. Thank you.
Fabulous. So that's it. That's
okay.
Podcast done. So I'll send it off to the editors. Should go live on Monday.
Perfect.
I'll send you the link.
Yeah. Sorry if I rambled a bit, but
No, you didn't. Do you know what? That's what I love about this, because there's no Q&A. It's a conversation with thoughts, and what's interesting to people to listen to is not a bog standard, I'll ask you this, then you tell me this, and everybody gives the same responses. So that's why I tell you what other people say, to see your point,
to get and some of it I hadn't necessarily thought about. And
that's what's interesting, because it's just.
So look, I mean, I've obviously going to a certain part, I'm going to make sure that I'm towing the party line. But generally, that I have to say, I didn't say anything there that that is not my opinion. In fact, I might get Peter or David or somebody saying to me, "Can't believe you said such as," but that's.
Would it be? Do you want me to send it to you beforehand so you can listen to it and check with anyone that you want to? Because I don't think you've said anything.
No, but that's my point. I'm not worrying about that. What I'm saying is, I could say, I could just quote you completely, just shut everything down and make it very political and very protecting my own back. But, I think, I do genuinely think that the key thing is, if we can keep businesses going, if we can help keep businesses going, they will bounce back.
And I think that's
this isn't a fundamental, this is not something that's been coming for ages. Like, a reset. That's what I disagree with. A reset of the economy where it's been overblown, and okay, the stock market's been high, but the stock market's taken its pain. The stock market has done that. These are not businesses that were, I don't know, will people still want to go and eat in restaurants? I think so. Will people still want to go to hotels when this is all over? I think so. Yeah, will people be more careful about their hygiene and stuff like that? Yeah, but I don't see it as I just don't see it as a fundamental reset. I mean,
No.
did you know this, Sarah? How many people under 45 have died of COVID-19 in the UK?
I should know because I spend all my time on Worldometer.
But it's
Looking at the
11.
stats.
11 people. I'm not saying that's something to be, we should be sort of, not be careful about. But this has affected older people in the main and people with underlying illnesses. It's not something, if this had been a pandemic where literally, the Spanish flu, 50% of the population were dying, you'd be saying, we're knackered. Frankly, all bets are off.
Do you know what I think? I think that we've been coming to the tail end for the last 20 years or so of the Industrial Revolution. And
Okay.
We've been fighting with the information revolution, just as a broad concept, right? And I think if you look at the generations that are below me, the younger generations, the entrepreneurial mindset is something totally different to the generations for me and above. Totally different, and there's a lot more of it. And I don't know if you have been badgered into reading Charles Handy by Peter, but I did.
I've read it before. Yeah.
Have you read The Second Curve?
I haven't. I read it when I read I read The Empty Raincoat, and I read his organisational seminal work, but I haven't read the latest.
The Second Curve I really enjoyed, because what it's talking about is businesses as a shamrock. So they'll have their core and they'll have all the flowers around the outside that are external businesses that are add-ons, either outsourcing or similar to what GRP have done. You've got the core and then you've got all of these businesses around. And I think that idea is taking stock. Look at Amazon, look at Google, look at any of the big companies that will probably take over the world. And it's all IT based, it's information based, it's entrepreneurially minded, that the challenges and the way people are growing. And I think COVID-19 has basically just shifted the world off the precipice, and it will land in different formations. And I think it'll be very different in a lot of ways, because I think it's going to give the real techie kids in their 20s now. For example, my VA is 21. My God, do I wish I had half of her now at 21 that she has. She's phenomenal, and that I think this is a breeding ground for that. So I think I think there's all kinds of crazy things going on.
One of my fundamental beliefs, Sarah, is in the ingenuity and the robustness of human beings. You read Man's Search for Meaning, for the Viktor Frankl book. People were walking dead in concentration camps, yet recovered, yet stayed alive on a it's actually Holocaust Memorial Day today, on a tiny piece of bread on 30 calories a day, and came back and set up multinational businesses. So if you can come back from that,
you can come back from anything.
You can come back from, we will come back from this. This idea, maybe there'll be some degree of reset. Frankly, poor businesses will continue to be poor businesses. Good businesses will continue to be good businesses. I do think there's something in this. I've been reading a lot recently about this over the last few days. The lockdown, I don't know if you saw on the news last night, the Americans are now starting to protest about lockdown. We've had none of that in this country. We've sucked it up. We've been told stay at home. We've stayed at home. This idea that the British, stick two fingers up to authority, we've taken this, and I think people are going to start to push back on that and want to go out and get back to normal really, really quickly.
Really quickly. Do you know what my kids hate, but is my go-to every time? Stimulus, choice, response. So don't tell me you were angry, so you hit her. And Isabel can never remember the name Viktor Frankl, so she comes up with all kinds. She's like, stimulus choice response, stimulus choice response. There it is, dude. You get to choose how you respond to this particular moment.
Absolutely.
And they hate it. And it'll be that thing that their kids, they say to their kids, and they go,
oh yeah,
oh.
My mum used to say that all the
Yeah.
time. Yeah,
No,
absolutely.
I think you're absolutely right. And I've really enjoyed our chat. So thank you very much.
Not at all. Good to speak to you.